right? And you're trading with cuts of about 1.1% or thereabouts. And the broader markets are where the heavier selling is taking place. You saw this in trade yesterday as well, where the benchmark ended flat, but you saw considerable selling in the broader end. You have cuts of about 1.9% for the mid-cap index, about 2% or thereabouts for the small-cap index. And the market breadth, as a result of which trade is very, very heavily tilted in favor of the declines. And where do you seek refuge in this kind of a market? Because if you pull up the sectoral picture as well, you will notice that all the sectors are in the red. And while the VIX has come off a bit, it was up 5%, it's still above that 13 mark. But some people are saying that that is also a bit of a positive. We're looking at the relative strength indicator numbers for the Nifty 50 for a 14-day period, and they are in fact in oversold zone. So some people saying that the market may be, of course, oversold. This might be a little too far, but then they've been saying that for some time right now, and we haven't yet found a bottom for the benchmark or indeed for the broader markets. But everything from an IT, which is losing close to 4% at this point, to something like an auto, which is down about 2.5%, the likes of M&M losing quite a considerable amount of ground today. Metal down about 1.5%, was up and about yesterday. Pharma as well, where you've seen a pocket of strength in the recent past, is down over 1% or so. Even Nifty Bank, which has gotten a shot in the arm, or actually a couple of shots in the arm in the recent past on the back of RBI measures to reduce the risk weights on loans to non-banking finance companies, and also to infuse liquidity, as we've heard from Vishwanath Nair, who's got source-based information that a dollar swap will be taking place and will be conducted by the RBI to the extent of $10 billion to infuse liquidity into a system that is still starved of liquidity. Even that pack is down quite considerably in trade today, 0.7%, but falling less than the rest of the market for the Nifty Bank, and off the low point of the day. The Nifty Finance as a whole also losing ground. So where do you seek refuge? Let's go across to our experts. We've got Jatin Gedia, who's a technical research analyst at Mira Asset Sharekhan, or Sharekhan by Mira Asset. And we've also got Avinash Gorakshakar, who is Director of Research at Profit Mart Securities. Good morning, gentlemen, and thanks so much for joining us today. Jatin, I'll start with you. Where do you seek refuge and how do you position yourself? Of course, I'm also asking about the index strategy that you would employ right now.
Yeah, so good morning, everyone. So as far as the Nifty is concerned, yes, since last 3 trading sessions after the gap down on Monday, it was consolidating, and again, once this monthly expiry got over, we have seen a gap down. So that indicates that the Nifty is now likely to head towards 22,000 on the downside. So this is as far as the Fibonacci extension number is concerned, and also if we look at the monthly options chain data, what we have observed is that 22,000 strike put option has a significant overhead. So that is likely to act as a strong support in the case of Nifty. On the upside, until and unless the gap area that we have formed today, so 22,400, 22,500 remains a crucial resistance to watch out for from an immediate basis. So we believe that during the initial first couple of weeks of this March series expiry, we are likely to head towards the 22,000 mark in the very short term, and thereafter we can expect some recovery or a relief rally. But as of now, the bias remains on the short side, and on the downside, the crucial level to watch out for is the level of 22,000.
So more downside awaits is the view coming in from Jatin. And in fact, the benchmark, that is the Nifty 50, is down about 15% from its 26,000 highs, about 26,000 highs. Okay, moving on to our first caller for the day. Ajay from Ambala is calling in. Ajay, very good morning. कैसे मदद करें आपकी?
गुड मॉर्निंग मैम, गुड मॉर्निंग सर, थैंक यू मेरी क्वेरी लेने के लिए। मैम मेरा क्वेश्चन है रिगार्डिंग टीसीएस का। मैंने कुछ दिन पहले ये टीसीएस की पोजीशन ली थी 3725 पे 1000 शेयर्स पे। अब ये काफी थोड़ा नीचे आ चुका है, क्या मुझे इस पे एवरेज करना चाहिए या निकल जाना चाहिए?
अच्छा अजय, आपने चार्ट्स दे के लिया था ये शॉर्टर टर्म पर्सपेक्टिव के लिए?
नहीं मैम, मैंने लॉन्ग टर्म के पॉइंट ऑफ व्यू से ही लिया था, क्योंकि जब नीचे आ रहा था मुझे लगा कि दैट्स द राइट टाइम टू बाय, बट उससे भी नीचे आ गया 2-3 दिन।
ओके, और ये आपका कितने पोर्टफोलियो का कितना पोर्शन है एज अ परसेंटेज? बिकॉज अभी आप ऑलमोस्ट 2.5 के लॉस पे बैठे हैं।
मैम मेरा ये कम से कम 60% है, मैंने 60% पोर्टफोलियो का ये उठा लिया।
All right, Ajay, I'll go to Avinash and also, ask Avinash to advise you that such a heavy amount should be invested in one particular stock when it, constitutes almost 50% of your portfolio. क्या ये सही चीज़ है कि नहीं? Avinash, I don't think, according to me, that's the right strategy to adopt. Your view on that, plus TCS as a company, what's the view like?
Yeah, good morning, Mahima. I think clearly, as you rightly pointed out, 50% in one stock is definitely not an advisable option. Because having such concentrated bets in such volatile markets is very risky, because now, obviously the investor has purchased the share at around 3,700. Now it's quoting at 3,480. See, my sense is that at least going forward, investors should make it a point that at best you should try to allocate initially only 5% or maybe 6% in every stock, because in this kind of market taking concentrated bets can go wrong. As far as TCS is concerned, I can only tell him that if he has taken it as a long-term investment and by not looking at the charts, then I think he definitely can hold on. I think TCS is not a company which is a weak player in the IT market. In fact, IT is one sector which is unlikely to be badly impacted, because clearly the tailwinds in the market clearly show that the rupee is depreciating, the dollar is appreciating, and most importantly, the US market, once things stabilize there, you're going to see a stronger commentary from most of their clients in terms of incremental, kind of order wins. So I think he needs to give in at least next 12 to 15 months, because as of now, fundamentals are not being considered. It's purely the sentimental effect which is playing out. So I think if he can hold on for the next, say, 12 to 15 months, I think he can definitely expect a decent risk reward, provided he has the patience and the conviction, because in these markets people get panicky. I fully agree with that, but I think selling good quality blue chip stocks in this kind of market will not be the right solution. So I think he should hold on, keep the conviction, and I think rewards would come in, but only after 12 to 15 months.
Yeah, hopefully that gives you some perspective. Thanks, Avinash, for that view. And TCS, of course, among a pack, as part of a pack that is the worst hit in trade today. So maybe also to a certain extent your losses are getting compounded by that and looks worse than it was obviously yesterday, down about 3.7% as we speak right now. Let's talk about the next question, and we've got Sadanand writing in from Goa. He's asking about Hindustan Copper, which is bought at levels of 305. Hold, sell or add more is the question, and normally I would go to Jatin on this one. But Avinash, I want to come to you, because ultimately we're talking about metal counters that are going to be a little wobbly, right? Because there's so much uncertainty on the global front. What is happening with the US tariffs? What is happening with China growth? And copper ultimately will move based on that underlying growth picture on the global stage. So would you hold on to this?
No, I think, see, specifically as regards Hindustan Copper is concerned, I think, this is a company which has got a fairly strong balance sheet. It's got a product monopoly in the Indian market. And I think, as you rightly pointed out, any further re-rating, from these levels can be possible only if metal prices start improving. There is some stability from the US market side. And as far as tariffs are concerned, we are yet not clear how badly, these companies which make metals, especially Hindustan Copper, would get impacted, because typically, I would say that the electrical wire and cable sector has been growing very rapidly. So there's a good domestic kind of tailwind. But as far as global metal prices, copper prices are concerned, unless there is some remarkable bounce back and that is sustainable, only then one could expect a big revival. So I think if the investor can hold on for the next, say, 6 to 12 months, because I think clearly copper is one input which is going to definitely go up in the longer term. In the short term, maybe for the next couple of quarters, you could find that the performances could be little wobbly and little volatile. So I think keep the time frame slightly long term, and I don't think you're going to see a further cut from these levels. It's already down by 50% for the investor. So I think he needs to hold on. Averaging would depend on the March quarter numbers. Once the annual commentary is out, at that point one can take a fresh review.
All right. So comprehensive view there on Hind Copper. We've got our next caller from Srinagar. Yamin is calling us. Hi, Yamin. Good morning. How can we help you today?
Yeah, hello.
Can you hear
Hello?
me? Yes, we
Yeah, this
can
is
hear.
Yamin.
Hi, Yamin.
Yeah.
Please
Yeah,
go ahead.
my query is regarding Inox Wind Limited.
Okay.
I'm holding around 1,200 shares at the price of 183.
Okay.
And it has went down to 153.
Yes.
I want an outlook for around 6 months. Should I hold or should I exit at this level and re-enter if it goes down?
Re-enter. Yeah. Okay. So that's a fair question, Jatin. I'm coming to you, and he's lost a little bit of ground, as have a lot of other people, and he's got a relatively short time frame. What are the levels that you should look at in the near term? Where would you put that support, and should he extend his time frame at all?
No, see, in the case of Inox Wind, I think the crucial support is at around 130 odd levels. Below that, the support is at around 121. So we can broadly say that 130 to 120 is a range where we can expect Inox Wind to see some kind of a stability or this fall to subside. So I think as of now, he should hold on to his investment and look for a turnaround around the zone of 130 to 120 kind of a range. So as of now, hold is the suggestion, and we can expect a turnaround from the support zone of 130 to 120.
All right, so that's the view with respect to Inox Wind. The next counter that we're talking about is Capacite infra projects. Harshad from Pune has a query on this particular counter. He is holding 300 odd shares at an average price of 380, and he wants to know whether he can add more at the current levels, and his horizon is around a 2-year period. Avinash, I'll come to you if you have a view on Capacite infra projects.
Yeah, I think Mahima, he can definitely hold on. See, this company is a company which specializes in basically, as a EPC contractor, and basically it's got very large clients like L&T. Most of the reputed, construction houses actually are their vendors. So I think clearly they have an order book of almost 2.5 to 3,000 crores. So clearly, I think if you look at the current year valuations, they trade at around 12, 13 times, FY25 numbers. So I think, this business is giving a strong amount of visibility. But yes, I think since the investor has purchased it at a slightly higher level, unless, he gives a 12 to 18 month time frame, because margins are pretty healthy, around, 10 to 11% on the net level. And working capital management is very crucial. The company made recently a QIB with large institutional investors. So I think the stock is definitely going to do well over a longer term period. But in the short term, maybe there could be little volatility. I would suggest that unless he's got a 12 to 15 month time frame, I think it would be advisable to at least nibble in into a small quantity and average his cost as of now.
All right, so that's the view with respect to Capacite infra projects. We have our next caller lined up. Anand from Andhra Pradesh is calling in. Anand, a very good morning to you. I believe you have a query on one of the IT counters, HCL Tech.
Yes, it's regarding the HCL Tech. I have bought around 1741.
Okay.
Around 20 shares. So I just want to know, can I add further now because it's corrected around 10% from where I have bought. I just want to know, can I add or do I need to wait for some time? I will be holding for long term, for 2 to 3 years more than.
All right. Okay. Avinash, HCL Tech is the counter, and I'll combine this question with Bhupendra's question as well. He wants to know context with respect to Wipro and Infosys as well. So 3 counters: HCL Tech, Wipro, and Infosys. Nifty IT, by the way, today is down by about 3 odd %. All counters trading in red. What's the view like?
So I think within these 3 counters, I think HCL Tech definitely seems to be better. So the second counter would be Infosys. And I think, HCL Tech is definitely coming down to very attractive levels. I think at best around 1,500 or maybe 1,475 could be levels where the stock could bottom out. And I think, the most important thing is most of these companies are sitting on order books at least for the next 12 to 18 months. In case of Infosys also, I would suggest that, if the investor can hold on for the next at least year and a half, most of these companies, both these companies have got very strong balance sheets. They don't have a concentrated mix of clients, unlike Wipro, which has got a large tilt towards the telecom sector. So my sense is that, Infosys and HCL Tech, could definitely be accumulated at the current levels, provided the investor is willing to, remain invested here for the next 12 to 15 months. I think in the short term, my sense is the markets are worried as to what could happen because of the tariff issue. But I think IT is one sector where I think there could be a lot of stability, because this is one area where Indian companies are very price competitive. They offer quality IT services. So I think, both these companies should do well over the longer term. So I think you just need to bide some time here. But in the short term, yes, volatility will be there.
Bhupendra's question has been answered as well. And the next one is on ITD cementation. And this is a question from Satyan. He's holding 3,000 shares at a price of 125. So he's in the green, and how, right? So he's making quite a considerable amount of gains in this stock. He's wondering what the long-term charts are indicating for this going forward. And should you exit and re-enter? Is there an opportunity for a trade here, or should you continue to hold? Jatin, I'm not very certain, because he would have to book 12.5% on long-term capital gains, assuming that he would have to book more than that. So it's considerable amount of gains that he would have to book, right? So what are the charts indicating? Where do you see support?
Yeah, see, in the case of ITD cementation, I think considering that he is sitting on a very decent amount of a profit, despite the tax component, I think he should consider some amount of profit booking. In the case of supports that I see on the weekly charts, we believe that 500 is a very crucial support from a short-term perspective. And if we can hold on till 480, then that's next crucial support. So anywhere between 500 to 480 is the long-term support area in the case of ITD cementation. However, I suggest to consider some amount of profit booking because I think considering the overall market conditions, I think some amount of profit booking is definitely suggested.
Okay, all right, some amount of profit booking. So take some money off the table, and not many counters that you can say that about in the current context. So kudos to you for having that kind of an investment that you've made. Our next caller is from Bengaluru. Murli is calling us. Hi Murli, how can we help you today?
Good morning.
Good morning.
Yeah, I've seen one company, analyze a company called Signature Global.
Yes.
Which is a real estate firm based on Gurugram.
Yes.
I think it's an exciting prospects ahead.
Okay.
It's a good return on equity, ROCE, and doubling the profit, or rather doubling the profit next 2 years. With a low base. So can I enter this at the current? Yeah, tell me.
I'm curious where you read this, Murli, doubling.
I had to go through some reviews, some brokerage reports. Not one, because one may be biased. So I have gone through a few reports and comments of others.
Okay, and you've not deployed yet, right?
One of the interviews are the management interviews also.
Yeah, you've not invested yet, right?
Yeah, I want to invest, considering that I'm willing to take a chance.
Yeah.
Based on fundamentals.
Do you have any other real estate stocks?
1060. Yeah, I have Godrej Properties under shares.
Okay, understood. Avinash, opinion on Signature Global? I'm not sure where he read this, but expectation of doubling, tripling of profit over the next 2 to 3 years?
Well, I think, Alex, my sense is that, obviously long-term prospects are pretty solid considering the kind of inventory they are building and the kind of markets they operate. Because Gurgaon is a very strong market in terms of pricing. But I think, my sense is that even at these levels, one needs to be a little cautious. I think it's better to wait for the January to March quarter. My sense is that, of course, the rate cut cycle has happened. But I think the bigger issue is that, at these levels, immediately, I don't perceive that the stock looks extremely attractive and oversold. It's come down from its high. But if you ask me whether, the next 3 months or 6 months, one could expect some explosive numbers, it's difficult to say, because I think clearly, even if the investor takes a 2-year call, it's better that he waits for the March quarter. I think there's nothing to lose, considering the fact that the stock is going to go up in a hurry. Opportunities will come in. And I think even if he does want to buy, Alex, I would suggest that he can deploy at best about 10% of his capital. I think it doesn't make sense to buy all the investments in one shot. So that would also give him the benefit of averaging. But my suggestion would be that wait for the March numbers to pan out. And obviously, then there would be better clarity, because probably by middle of April or end of April, you could get these numbers. and that would be a good time to accumulate. But as of now, it looks a little bit risky according to me.
If I'm wrong, Avinash, while some of these companies, real estate companies, have reported decent numbers, and we're looking at pre-sale numbers, we're talking about a few that have disappointed as well. So I think that caution is warranted, right? And what is the metric that you would look at? Would you look at pre-sale number as well?
Exactly. I think in most of the real estate companies, Alex, pre-sale numbers are important, and execution. I think, the timely execution of these projects is very important, because the pre-sales number is one part, but secondly is the execution on the ground. And I think clearly, I think October to December is typically a very big season for, launches, pre-sale numbers. But I think typically now going forward, I think, from April onward, we'll have to see how execution takes off. So clearly on both these parameters, I think Signature Global definitely looks interesting. But I would say that, the stock has risen also very fast. So I think this correction which is happening is by those, participants who actually got stuck up at higher levels. So it's better that you wait for some time, because in these kind of volatile markets, real estate is a high alpha sector. You need to time the investment also properly. So in case, since the investor has not yet made a fresh entry, at best he can buy 5% or 10% of his capital and wait for some further kind of correction, which can generate a better ROI for him going forward.
All right, that's an interesting, takeaway on Signature Global, as well as what he mentioned, because real estate always has a higher alpha when markets are falling. Just to give a bit more perspective in terms of 9 months FY25, versus the guidance that they had given. In terms of launches, they've achieved around 84%. In terms of pre-sales, they've achieved around 87% and collections is around 53% is achieved. So one last quarter will play a crucial role, like Avinash mentioned, as to how the guidance is being
and the
achieved.
metrics that you pointed out,
Exactly.
extremely important to track apart from pre-sales as well.
Exactly.
Thanks so much for bringing that up.
Yeah. So, okay, that was with respect to Signature Global. The next counter that we're talking about is Persistent Systems, again an IT counter in focus. Mahesh is holding around 3,600 odd shares at an average price of 500 rupees. He wants to know with respect to the charts, since he's saying 1 year outlook, and that's a significant amount of profit that he's sitting on, because he's entered at the levels of 500 rupees and the stock is currently trading at 5,200 odd rupees. So his profits right now is 1.7 crores. So kudos for that, first of all, Mahesh, and the kind of patience with which he's held on to the counter. But okay, since he has been a long-term investor, Avinash, I'll again come back to you. Persistent System, what's the outlook like? Should he book profits at the current level to some extent, or should he continue to hold the entire holding that he has?
No, I think first of all, Mahima, as you rightly pointed out, the investor has entered the right price, so his margin of safety is very, very solid. He cannot, he has absolutely no issues even in the current markets, because his acquisition price is just about 500 rupees, and now the stock is almost more than 5,000. So my sense is that clearly, if the investor does not require funds, he can continue to hold, but a prudent strategy would be that at least, try to at least book 20-25% of your profit, so that you could get advantage of the market, of some other growth opportunities, because, these markets are offering a lot of value. When the bounce back will come and when the markets will bounce back is a big question mark. But I think clearly we are nearing the bottom, and I think when we near the bottom, you get good quality companies also at attractive levels. But the key question is, do you have that kind of liquidity to infuse? So since he's made a decent profit, I think 20 to 25% of the profits can not only take out his capital cost, but give him the flexibility and the leverage to get into some other growth stocks. So I would say that, longer term prospects for Persistent are very good. Our sense is within the mid-cap IT pack, this is one company which is bound to do well. They have a good order book. The management commentary in the previous quarter was also very encouraging. So I think even FY26 is going to be a lot better. So I think there's nothing negative on the fundamental side. But I think prudently would call for at least some part booking, which helps him to keep also his liquidity intact.
That's a fair point, and you've shown patience, and kudos to you for having held on for the amount of time that you have and the gains that you've made. We have to slip into a very quick break. Avinash, do stay with us, and Jatin, I believe that we have to say goodbye. So thanks so much for joining us today, and pleasure speaking with you as always. We'll be back on the other side to take more of your questions. Do stay tuned.
very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं.
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है.
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए.
पूरे साल का एक्सपोजर दिलाने के लिए हमें
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered, whether they're fundamental or technical. For viewers who are just tuning in, you can either call us or WhatsApp us on the number that's flashing on your screens right now. We're also joined by Osho Krishnan, who is a senior research analyst and technical and derivative analyst at Angel One, who joins us now. Welcome to the show, Osho Krishnan. I'll go on to our next caller who's lined up. Shishir Mishra from Delhi is calling in. A very good morning to you, Shishir. How can we help you?
Good morning, ma'am. I have bought a Happiest Mind share, 100 shares at 846 rupees.
Okay.
And I'm a long-term investor, and my question is, should I hold it, or is it the right time to buy a little bit more?
Okay. Avinash, one more IT counter on your way. Happiest Minds is the counter. What's the view like?
So I think Happiest Minds is one of those companies, Mahima, which is very strong in the digital space. And I think they've got a very good marquee list of clients. My sense is, the last couple of quarters have been quite challenging, but I think the management is quite hopeful that coming year, they have a reasonably good order book. The execution also will be pretty good. And they expect a good traction in from their US market, kind of customers. So I think, despite the fact that the investor has actually lost a little, he's down from his current price. I would say that, if he can continue to hold for the next, say, 12 to 18 months, I think the recovery in the digital business would come in quite significantly. There are other, markets which the company is trying to penetrate and possibly could give a further lever to their earnings, traction. So I think, he should hold on. I think he should not lose heart. It's a good company, a very strong management team, a strong bandwidth to understand the digital market. So all said and done, I think continue to hold, but I think don't expect a big revival in the March quarter. I think things should start improving, from the first quarter of FY26 onwards.
That's the view on Happiest Mind. So hold is the view. Let's take the next question, and we've got Ambuja Cements that we're talking about next. And Hari from Bengaluru is asking, he's holding 115 shares, which he's bought at an average price of 559. He's currently incurring a loss, but he's wondering what the prospects are from a 6-month to 1-year time frame. Osho, morning to you. And what would you do with an Ambuja Cements on the charts?
Very good morning, Alex, and all the panelists. See, overall, the technical setup for Ambuja Cement is quite weak as of now because it is hovering below the short-term moving average also. But the buying price is approximately 10% or 20% from here onwards. But looking at the overall setup, the counter has already been into the oversold terrain. So I'm expecting that the zone of nearly 450, 445 construes a bullish gap on the weekly time frame. So that is a very strong support zone for this counter. So I'm expecting that this zone can provide some kind of a cushion to the kind of a sell-off that we are witnessing in this counter. And from there onwards, we can see some kind of consolidation or reversal once there will be buying traction or buying emergence in the whole market. So one should stay invested from a longer term duration. I am expecting that approximately the zone of 440, 445 should be seen as a very strong support zone. And from there onwards, one can see a kind of a reversal in this count.
Okay. Standard disclaimer, of course, Ambuja Cements, part of the Adani Group. This is NDTV Profit, part of the NDTV Group, which is owned by the Adani Group. The next question that I would like to take is on Bajaj Housing Finance. And we've got a viewer, Nagula Raju, who's writing in probably from Andhra Pradesh and asking about, okay, so we've got live visuals coming through.
Priority areas, what will be priority areas?
No, as I said that I am yet to join, so let me take over.
But you have been speaking about the growth of the market even during the budget conversation. But what, in that context, sir, what do you think, where is the market standing and how does the regulatory body play a role right now?
Well, I think I will not speak at this moment. Let me take over. Yeah? Thank you.
Thank you so much.
So the stage is set for Tuhin Kanta Pandey, who, remember, has served for a long time as DIPAM secretary and so is well versed with the markets. He actually was at the helm when the Life Insurance Corporation of India IPO took place, and he's been instrumental in that IPO and several other divestments that the government has done over the course of the last several years. He will take charge shortly, either later today or on Monday. And of course, you have Madhavi Puri Butch's term, which ends today. So we'll hear from him, I'm sure, sooner rather than later, and you will see regulations over the course of the next coming weeks that will be his, probably his brainchild. So let's talk about the next question. We've got Bajaj Housing Finance, as I was mentioning, that Nagula Raju got allotment of during the IPO stage, and he's wondering whether to hold or exit. He's got a long-term view on this. The stock is currently at 108. Do we have a visual of the change since issue price? If we can pull that up, let's try and do that, because it'll provide a context for this conversation and this question. In the meanwhile, let me go across to Avinash. Avinash, what would you do with this one? Because it's not done a lot. And the prospects were very good. I think there was a lot of interest in the IPO stage. It was oversubscribed, and how we've seen assets under management grow at sub 30%. So what are the prospects here?
Alex, I think my sense is, this is a company which is funded by the Bajaj Finance, kind of entity. The issue price, as you know, is was 70 odd rupees. So I think that time the euphoria in the public issue market was really very, very strong. I mean, even in this market, this company is standing high. As far as the fundamentals are concerned, we believe that the next 2 to 3 years are going to be very solid for this company, because the balance sheet is large. The asset quality is well under control, and I think both the private as well as public opportunity. The government is also encouraging housing in a very big way. So despite the fact that previous 1 or 2 quarters were not very great, I think one possible thing is that steady growth will definitely come in, and I think Bajaj as a group is very well respected. My sense is that if the investor has at least a 2-year perspective in mind, he should hang on. He should not miss out on the bigger opportunity going forward. So, that definitely is something which we would like to reiterate that it's a hold from our side.
Right, so that's the view with respect to Bajaj Housing, and hold is the view from Avinash. We have our next caller lined up. Adil from Srinagar again is calling us. Adil, a very good morning to you. How can we help you?
Hi, ma'am. I have a query regarding NIIT Limited.
Okay.
I'm holding 5,500 stocks at the rate of 153.
Okay.
And it has came down to 113. So I'm having a loss of 2.2 lakh rupees. Should I hold or should I sell this off?
Okay, Adil, just wanted to understand that you saw the fundamentals of the company when you bought this. What is it that attracted you to the stock?
It was basically some investor, I guess Vijay KD or someone else who purchased the chunk in this stock, So I also purchased this stock.
Okay.
No fundamentals.
Okay, all right. I got your question, Adil. Osho, I'll come to you on this one. NIIT Learning Systems is the counter. What are the charts looking like, and what are the supports and resistances that you're observing?
See, for this counter, we have seen a kind of a steep correction in the last couple of trading months, and now it is hovering at a very low levels of 110, 112 kind of a zone. But looking at the historical support, the zone of nearly 108 to 105 has given a very strong cushion to this counter. So I would advise not to exit this counter at current levels because it has already seen a steep correction from a higher valuation towards the support zone now. So approximately 7-8 rupees kind of a slip can be seen in the short-term period, but the zone of 106, 105 has historically seen a decent cushioning in this counter before the rally it has seen in the month of August 24. So I'm expecting that one should stay invested with their investments in NIIT Limited, and in couple of months or couple of weeks, we can see some kind of respite in this counter. Technically, there has been no sign of pullback or decisive respite as of now, but I'm expecting that another 5 to 7 rupees kind of a downside move can provide a strong cushioning to this counter. So stay invested from a medium-term perspective. There is a high possibility that the buying price will be seen very soon from a 6 to 7 month kind of a time frame.
All right, just a bit of correction. It's NIIT Limited and not NIIT Learning Systems. Moving on to the next counter that we're talking about, it's Yatharth Hospitals. Amit Singh wants to know whether, from a medium-term perspective, whether this is a good counter to invest in, and by medium-term, he means 2 to 3 years. He's looking to buy around 500 odd shares. Avinash, do we have Avinash back? If yes, Yatharth Hospital is the counter. What's the outlook like, and from a 2 to 3 years perspective, is this the good entry levels to enter?
Yeah, I think Mahima, see, clearly Yatharth Hospitals operates in the in the Noida market and has been doing pretty well. In fact, numbers have also been quite encouraging. The stock has been partly beaten down because of poor market sentiment, and secondly, there were some corporate governance issues. But I think management has clarified that there's nothing of this sort, and things are back to normal. See, my sense is that if the investor has a 2 to 3 year horizon, the hospital space offers a very good opportunity. Healthcare is one area where I feel there's going to be a lot of growth coming in, considering the fact that the government is also supporting this sector, and considering the specialty services offered by Yatharth, I would not be surprised that earnings would be bouncing back from FY 26 and 27 onwards. So next 2 years are going to be pretty solid. They made a QIP of almost 600 odd crores, basically to fund some new assets as well as for their working capital requirements. So the company is well funded. I don't think any further dilution is expected. So I think if he has the time frame of at least a couple of years, he could definitely chip in at the current level. But I think the risk reward would obviously come in from the longer term. In the short term, it's going to be the sentiment which is going to play out. Completely ignoring the fundamentals.
Speaking of sentiment playing out and ignoring fundamentals, let's pull up Polycab, let's pull up KEI Industries. And these are two counters that were beaten down very, very heavily in trade yesterday. They're making a bit of a comeback today. KEI was down 20+%. Polycab was down close to 20%, up about 2% right now. We've got Suresh from Hyderabad who's asking whether they can be bought right now, specifically these two counters, KEI and Polycab. And since they're from the same pack and also reacted together yesterday, let me go across to Osho to find out whether or not it can be bought right now. Osho, would you steer clear or would you dive in?
See, overall, I expect that such kind of correction has already been seen in the stocks like Polycab historically in the month of January 24, and after that we have seen a very decent recovery also, and the counter has even tested the lifetime highs. But this time the situation is different because there is a new entrant, so obviously the market share is going to get some hampered because of the new entrant. But overall, the technical structure still prevails that the counter is at a decent zone to accumulate. So I would advise to start accumulating in this counter, but in a staggered manner, because once if there will be any kind of consolidation that can be seen in the coming future, then we can consolidation in the coming future, then only we can see some kind of higher momentum coming back to this counter. So I expect that there is a possibility of a strong pullback or revival in this counter. So one should definitely utilize this kind of a dip to accumulate from a medium to long term perspective in both the companies like Polycab and KEI.
So that's a technical perspective, but do bear in mind, of course, that there was a significant fundamental development yesterday which caused the entire raft of stocks to see a sharp drop. We've got our next caller. We've got Anant calling us from Bengaluru. Hi Anant, how can we help you today?
Good morning, Alex. I was calling in to check whether is it a good time to enter into Federal Bank and Karur Vysya Bank.
Okay, two counters. So why these two banks, Anant?
I have been noticing, these two banks are doing really good. Quarterly results are good. Federal Bank is a slow mover, but it is moving good. However, it has fallen already from 220. I have been noticing, and it is now around 176, 178 in that mark. So results are good, and they're doing good. So corrections have also happened. So I thought,
so you're looking to buy this for your long-term portfolio, Anant?
Yeah. Around 2 to 3 years, I will keep.
Okay, so Federal and Karur Vysya Bank, right?
Correct.
Okay. Avinash, perspective on these two banks?
So Alex, I think as the viewer mentioned, Federal Bank has come out with a decent set of Q3 numbers. Even the management commentary has been encouraging. I think if he has a 2 to 3 year kind of time span, this could be the best time to accumulate banks because, a lot of panic has been created in the banking segment, considering that, deposit growth would not happen. But now with the equity markets, meltdown, I think we are going to see a good revival in the deposit base of good quality banks. And I think Federal Bank has got a very large, exposure in southern India. Their asset quality has also been managed pretty well. The other bank, Karur Vysya, has also started turning around. I think, it's possibly one of those banks where a lot of large HNI investors have also started looking at it. They have built up decent positions. My sense is if you can give the next couple of years to these banks, definitely the banks like Federal Bank has the capacity to, at least double their balance sheet in the next, say, 2 to 3 years. And that definitely will reflect in better profitability. Karur Vysya Bank is like a slow turnaround case. I think it could take a slight longer period of time, but I think valuations appear to be quite attractive. So definitely a small allocation as of now at these levels would definitely yield a good risk reward, provided you keep a time frame of 18 to 24 months.
So that's the view with respect to both Federal Bank as well as Karur Vysya Bank. We have our next caller, Suresh Kumar from Hyderabad, is calling in. Suresh, a very good morning to you. How can we help you?
Yeah, hi. I wanted to know about TCL products and SPA. Hello?
Yeah, I can hear you, Suresh.
Yeah, TCL products, I bought it at 630 price at around 100 shares.
Okay.
Can I average that one now or hold or sell?
All right.
And can I take an entry now?
Okay, got your question, Suresh. Osho, I'll come to you on this one. CCL products at the counter, what are the charts looking like, and can he make a fresh entry at the current levels?
In the past 3 months, this counter has been into a corrective phase, but looking at the monthly time frame and a broader time frame structure, it is having a very strong support around the zone of 550. So one should wait for another few weeks if there will be any kind of continued correction in this counter towards the zone of 550, 545. That will be an apt zone to start accumulating this counter from a short to medium term time frame. On the higher end, I'm expecting that above the zone of 650, the counter will start gaining a strong momentum. So 545, 550 on the lower end and 650 on the higher end is the immediate range for this counter. A strong momentum will be seen once it sees a breakthrough beyond the zone of these levels in the coming period.
Osho, Avinash, thanks so much for joining in, for answering all of these questions for our viewers, and always a pleasure having you on the program. All right, now it's interesting times for the asset management company industry, AMC industry, and that's because new products are in the offing. You had the regulator, Securities and Exchange Board of India, overnight or last evening, in fact, released the categorization or the classification of a new avenue of investments for investors. And this is called specialized investment funds. If you recall, last year a consultation paper was released talking about a new asset class, and now that has been distilled to be called now specialized investment funds. It's an interesting prospect, and we'll find out what the industry thinks about it and what products could look like going forward. To talk about that and to talk about who should be considering investing in this, we've got Radhika Gupta, Managing Director and Chief Executive Officer of Edelweiss Mutual Fund, joining in. Radhika, as always, thanks so much for taking the time. And I remember that we'd spoken about this when the consultation paper was open, and you said that this is going to be an exciting space, both from the perspective of the manufacturer of these products as well as the investors. What are your initial thoughts on the classification that you saw? A lot of long-short options available.
So I think the classification is in line with expectations because, SEBI has really worked to co-create this with AMFI. And the idea here, I think the fundamental idea is to give access to manufactured products that could not be otherwise possible on the MF platform, which is why two of the categories, one is a multi-asset category and the second is the equity category, are focused on long short. Now, in a mutual fund structure, in a typical equity mutual fund, I can't do outright shorts. If I have a negative view on a stock, I can't express that. The use of derivatives is limited. So I think that has been enhanced meaningfully, and it's with the right intent, right? You've not allowed leverage, for instance. Exposure can't exceed 100%. So it's somewhere actually between what you would be allowed to do on a mutual fund platform and what you would be allowed to do on an AIF platform, but all for the better. I think it is very good flexibility.
Now, from the perspective of the offerings that are currently available, and you've pointed out the two options that I want to speak about, essentially, the category 3 AIFs, you would see a gravitation away from them likely into this new product, one, because of the kind of product that is being offered and the tax treatment. Would you agree?
Yeah, in part, I would say, and I don't want to sound alarm bells, but I would say that there are two parts to category 3 AIFs. They are more long only oriented funds and they are long short funds. I don't think this interferes too much with the long only category. I think this does potentially challenge the long short category because a lot of those kind of structures, 80 long, 20 short, etc., that existed on the category are now going to be offered on a mutual fund friendly format with a lower entry ticket size, which is 10 lakhs as I understand, and with, if structured right, perhaps better taxation terms, which is the real big delta in my view.
Which is yeah, please go ahead.
So could it pose a challenge to Cat 3 AIF on the long short side? I would reckon yes.
Okay. So I'm trying to understand the kind of investor that you envisage will gravitate to this.
Yeah.
Are you talking about a mutual fund investor that has cut their teeth, that has established a certain scale and size, that is looking for perhaps a differentiated product, more aggressive product? Or do you think that a guy who, or an investor who is investing currently in a Cat 3 AIF that is looking for a better product in terms of tax treatment, maybe a larger size, I'm not sure at this juncture, would that be the kind of expectation?
I think so. I mean, I think you have both. It's certainly not a new investor or retail or small investor product, and the ticket size has been kept at that. So I think a PMS or AIF investor, an investor who was perhaps trying to do some hedging directly with F&O instruments, can turn to this, or a mutual fund investor who's seasoned, who has the ticket size and wanted a little bit more. I think in terms of investment profile and solution, what these two categories will give you, and we should talk about the third category separately, but what the long short and the multi-asset category will give you is more nuanced risk-adjusted return solutions. So right now you have more fixed income solutions, you have more pure equity solutions on the mutual fund platform. This will give you solutions in the middle of the curve. So I think for people who are looking for that nuance of risk-adjusted returns, and of course it depends on the products that the industry creates, this may fit that space well.
So, Radhika, I'm just wondering about how you think investors should classify risk here, right? Because going back to the point of mutual fund investors, just by dint of, and despite the correction that we've seen since September, by dint of investing consistently over a period of time, perhaps from COVID lows, you have a large number of investors that will have more than 10 lakh available to invest. So what should the thinking be, in your opinion, in terms of the risk involved in investing in some of these products?
So, okay, by the way, just because you have 10 lakhs to invest doesn't mean you should jump into SIF. I think even if you are going to start investing in one of these SIFs, and I've been the greatest advocate of Dal Chawal, it's going to be a smaller part of your portfolio. This is unlikely to be your core portfolio. So let's clarify that. I think to be an SIF investor, I suspect 5-10% of your corpus will go into an SIF. These are new products. So you need to have a 1 to 2 crore liquid net worth to really start thinking about this. I think the way investors should think about risk, look, even on the mutual fund platform, hybrid products, which are risk-adjusted return products, have been very, very popular. I mean, why do hybrid funds exist? They solve the purpose of risk-adjusted returns. So if a long-short fund, for instance, by taking 80% equity exposure, 20% short, is able to generate some alpha with 60% market exposure instead of 100%, maybe the drawdowns are half of what market-based products are. That is how investors should think about it. So investors should think about it in terms of volatility drawdown. The reality is not every investor can absorb a 30% equity market loss.
100%. And you've summed it up so beautifully. Radhika, so I'm not sure if I'm going to get the opportunity to speak to you next week, and I just want you to use this platform and this opportunity to ask you to send a message out to all of the women investors that are tuning in and that will tune in over the course of next week. Of course, I like to think that we should be celebrating women every day, but from the perspective of the upcoming Women's Day, any message that you'd like to send out?
Well, so firstly, happy, I am not here next week, but, wishing all of the women investors and employees at Profit a wonderful Women's Day. And I do believe it should be celebrated every day. I think the only message to existing women investors, I think the message is keep going. The fact that you've taken the step isn't in itself enough. And don't worry if you make mistakes, because I think with women, you make a few mistakes and you're dissuaded in your journey. I think this is a journey in which you live, you learn, and you get better. To people who are not investing yet, I think a bigger message, don't believe that you're not capable of doing this. Pick up small and get started, because this is not something to outsource.
Wow. Thanks so much, Radhika, for joining in for that perspective, and always a pleasure speaking with you.
Thank you.
All right. That brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put this show together. Thank you so much for watching. Do stay tuned. Lots coming up on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बता